All right, let's talk about something that sounds super complex, but is actually, well, it's fascinating. It's called IFRS. And I want you to forget everything you think you know about boring accounting rules, because this is different. Think of IFRS as the one single language that lets businesses all over the planet actually understand each other.
So let me just ask you this straight up. Let's say you're an investor. How in the world do you compare a company in Mumbai with a company in New York? I mean, really compare them, so you know you're not missing something? Before IFRS, this was a huge problem.
And the reason why is pretty simple. Global finance was just a total mess of different financial languages. Honestly, it was like every country had its own secret code. So trying to make a direct apples-to-apples comparison, almost impossible.
People actually call this situation accounting's Tower of Babel, and it's a perfect analogy, right? You had investors trying to read financial reports from all these different countries. And yeah, they all had numbers, but they just weren't speaking the same language. You couldn't put them side by side and trust what you were seeing.
You see, each of these local languages had a name, GAAP, which stands for Generally Accepted Accounting Principles. But the key thing to get here is that pretty much every country had its own unique version of GAAP, its own dialect.
So you have all this chaos, you have this confusion, and out of that mess, a solution had to emerge, a universal financial language that was designed to bring some much-needed order and clarity. And you guessed it, that solution is IFRS. IFRS, International Financial Reporting Standards. Now, pay attention to the words in that definition. They're not just any standards. They're specifically designed to be high quality, understandable, enforceable, and the most important word of all, global. So just a few quick facts you gotta know. The standards are issued by a group in London called the International Accounting Standards Board, or ISAB. Their whole reason for being? Uniformity. And for anyone watching in India, this is super relevant. India uses something called IND AS, which are basically IFRS standards that have been converged or kind of tweaked a little to fit the Indian context.
But look, to really truly get what IFRS is all about, you have to understand the why. Why was it even created? What are the big goals here? Because understanding its purpose is the key to seeing why this one language is such a game changer.
Goal number one, the most obvious one, is global comparability. It means that an investor sitting in Tokyo can pick up the annual report of a company based in London and get it. They can understand it, they can trust it, because both companies are speaking the same financial language.
Second, transparency. I mean, high-quality information is everything when you're making big money decisions, right? IFRS aims to give you that clarity, to pull back the curtain so that investors aren't just guessing in the dark. You can see what's really happening inside a business.
And of course, that transparency leads directly to accountability. IFRS helps close that information gap that sometimes exists between a company's managers and the people who actually own the company, its shareholders. And when everyone's on the same page, looking at the same clear data, well, that builds a massive amount of trust.
And finally, all of this adds up to something bigger: efficiency in our capital markets. Think about it. When investors trust the numbers they're seeing, they're way more likely to invest their money across borders. And that helps capital, money, flow to where it's needed the most, making the entire global economy run just a little bit smoother.
Okay, so we've covered the why. Now let's dig into the what. What does this global language actually look like in practice? You know, when it's written down on paper. This is the tangible output of the whole system.
And the answer is a nice, clean number, 5. According to the IFRS rulebook, specifically a rule called IAS 1, a complete set of financial statements has exactly 5 mandatory parts.
And here they are. First, you've got the statement of financial position. You probably know it as the balance sheet. Then there's the statement of profit or loss and OCI, which basically shows you if the company made or lost money. After that, we have the statement of changes in equity, which tracks the owner's stake, and the classic statement of cash flows. But, and this is important, look at number 5, the notes. Under IFRS, the notes aren't just some boring appendix. They are a critical, integral part of the financial statements, full of crucial detail.
Now we're at what I think is the single most important concept you need to know. If you really want to understand IFRS, you have to get its philosophy, its heart, and it's a huge departure from the old way of doing things.
This slide says it all. IFRS is principle-based. The best way to think about it is like a compass. It gives you a framework, it points you in the right direction, but it expects you to use your professional judgment to navigate the terrain. Traditional GAAP, on the other hand, is rule-based. It's more like a super detailed map with only one specific path. It tells you exactly what to do in every situation with very little room to think for yourself.
And here's the other big philosophical split: how we value stuff. IFRS really likes something called fair value, which is basically what an asset is worth on the market today. Traditional GAAP often sticks with historical cost, what you paid for it way back when. So imagine a company bought a building in 1980 for $100,000. Under historical cost, it might still be listed at that price, even if it's worth millions today. Fair value aims to give a much more realistic, up-to-date picture. It just makes more sense, right?
So, at the end of the day, if you take away just one thing, let it be this. IFRS is so much more than just a dusty old book of rules. It is a living, breathing language that's designed to build trust across the entire global economy.
And that leaves us with one final thing to ponder. You know, our world keeps getting smaller, our economy is more connected than ever, so it makes you wonder, what's the next step? What's the next evolution of this global financial language